Good morning, everyone. How are you this fine Friday morning? The end of another work week, which reminds me, I should mention right now, I'll try to remember to mention it again at the end of the class, there will be no trading room this Monday. That's Monday, February the 13th. I am not going to be available. So you'll have to fly solo on Monday. But I'm sure you guys will do fine. Most of you are knocking it out of the park already anyway. All right, so we've just had the market open up. And it looks like, well, the overnight was very, very quiet. If we take a look here at the Eagle, you can see yesterday's session kind of quiet anyways, wasn't it? The market made a steady progression higher, but it was slow, just kind of plodding along. Overnight, very, very quiet. And let's see, is there much of an opening gap? No, not really. Not really an opening gap that we need to be worried about, but I do think we have a little bit of maybe a downward bias this morning. Ever so slight here on the Raptor, just around the open. You can see we already produced a soft edge sell signal. As the market tests the extreme of the overnight, we're kind of settled now between the median line and the primary support. Oh, and now we're coming across with a hard edge buy. Do I really want to try to buy this early? What time is it? Oh, we're only 3 minutes into the session. Oh, all right, I'll get a chance at a second push. Maybe I'll enter above the high of this signal right here. Let's do that. All right, so what time is it again? Yeah, we're only about 3-4 minutes into the session. This is early, no question. David is asking, is President's Day Monday? No, I think President's Day is the following Monday, not this coming Monday. And I do believe the markets are closed for President's Day, but I'll have to double check the trading calendar to see what's going on for this year. Because I do tend to change things from time to time. Crude oil opening with a huge gap to the upside. Here's crude oil On the Falcon, and crude oil making a big run up through the overnight. So there's a big gap down here for crude oil to try to get into. Be interesting to see whether they actually are able to accomplish that. All right, we've got this market a little bit pinched now, and I'm going to try this OCO order again. So I'm going to look to sell down here. I'll buy above here, and then I'll explain what we have going on. All right, so we've got a little bit of sideways congestion here. I think that seems fairly obvious. When you identify a market that is sideways, you can bracket the market, as I've done here, to buy above the high of the zone and to sell below the low. And you can do that via our OCO orders. Now, from our lesson on the number 2 signal, you should be able to recognize that we are producing another cloud crossover, or pardon me, a soft edge sell signal right here. And that one just printed. So we have a market that is definitely conflicted. Very well balanced. And hopefully we're not going to see a false breakout. That's why I'm trying to stay below the primary support line as my entry. Gave the market a couple of ticks. Maybe I'll give it a couple more. I'm not looking for a quick entry here. I'm looking for a reliable entry. For those of you who have been curious about Ninja 8, I was speaking to Adam yesterday, and he says it's on the programmer's to-do list to have DTS and the Raptor Ninja 8 compatible before the end of the quarter. So they're working on that as we speak. Apparently the bugs that have cropped up are mostly cosmetic related to how the bars display and whatnot, not so much to do with the signal generation. But I guess Ninja changed a few things on the programming in relation to bar colors and whatnot. Or how they display, I should say. Wow, I really hope that we get a breakout when this occurs, because right now we are just trading right over top each other. Same little tight sideways range. Still stuck. Hi, Moses. Moses writes, "Hi, Eric. Do we have access to a Forex trading room?" I I don't think the Forex trading room is in existence any longer. I don't think it has been that way for at least a year or two now. If there's a market you'd like to see, though, please ask away. I certainly don't mind displaying the currency markets. Now, I may have to show you the futures version because there are some currencies that I don't have access to. And that goes for everyone, of course. If there's a market you would like to see, if it's gold or Google or whatever, if I can get it on my data feed, I will show it to you. All right, so the last swing, the buyers are holding on. But this is typical of a sideways range as well, that we tend to see buying at the bottom end of the range and selling at the top end. Okay, so we've got another number 3 signal here if you wanted to tighten your trade, but I think I'm going to stay with this channel type formation that we have going on here. Elmer asks, Eric, there are future and Forex templates provided. Are the Forex templates for real Forex or Forex futures? No, they're for real Forex, Elmer. The Forex market, it's one of the world's largest markets, as I'm sure you're aware. There's so much money that flows in and out of the Forex markets. It dwarfs the New York Stock Exchange. Just a huge, huge market. The good thing with the Forex is that you can tailor your risk size down to the penny if you wanted. So, whereas in a futures position, oh, excuse me. Ooh, I had a sneeze come on there in a second. Whereas in a futures position, this amount is locked. In a Forex position, you can adjust it by the number of contracts you trade. Because in the futures market, the contract sizes are preset, so you have no say-so. In the Forex market, you can trade one contract, you can trade 1,000, or I guess they call them lots. One lot or 1,000 lots. So you can adjust it so that the risk amount is something that is totally palatable to you. That also allows you to run sometimes some very deep stops. For instance, if you wanted to buy up here, you could run a stop down here, something that you may not even be able to duplicate in a futures trade. So what's the bad news, you say? The bad news is the spread. Future or Forex, they like to boast that, hey, you can trade Forex for free. There's no commissions. Yeah, there's no commissions, but they murder you some of the times on the spread. I've seen some spreads that have been obscene to the tune of $100, and that's just not right. Typically, spreads will range anywhere from $30 to $40, so that means the first $40 of your trade goes to your broker. Well, the futures, at least the commissions and fees are all up front. I know going in how much it's going to cost me. David asks, I heard it's a crazy to trade market. Hard to trade, yes or no? No more difficult than anything else. If you wait for, the right signal, the right setup, if you wait for your tests of the extreme and you recognize, when the market is starting to trend, it's no worse than trading anything else. The nice thing about the Forex, of course, is that it truly is a global market. There's always a currency being traded somewhere. I haven't looked at it for a while. I dabbled with it for a bit, but I could not get over the spread. It's my opinion the futures markets are a pure market, but that's just my opinion. There's lots of things to trade, though. You can trade futures, obviously. Day trading the stock indices, normally there's enough volatility, enough action, and if you don't like the stocks, well, there's gold and crude, soybeans, if you want to follow some of the grains. You can get into other precious metals like silver and copper. I wouldn't recommend platinum or palladium. Those are, well, I'm going to say a sucker's bet, but they're just a little bit too crazy, a little bit too wild. Yes, that's true too. David says silver has high profits and very large margin requirements. Yeah, you got to consider margin because it's going to limit how many contracts you're able to trade. There is a mini silver. I don't think it's really caught on like they hoped it would. There's mini gold and mini crude, but there too, I don't think they've really got the market participation that they were hoping for. What you can do if you want to trade a market that you can't afford, like silver, you can always trade options. You can always look to buy and sell, or not sell, but you can look to buy options, either put options or call options. Actually, you can sell options too if you want. It's usually a fairly steady way to make money. It's not sexy, but it does tend to be pretty reliable income stream. So while we've been chatting here, you probably noticed that we've been switching signals. We had the hard edge buy, now we're getting another soft edge sell, so the market very, very congested. I think that's fairly plain. And this really, my attempts here are very much a crapshoot. When the market is sideways, usually the better course of action is to let the market get outside of this range and then look for a signal. We're almost to the top of the hour, so it's been a very, very tight opening range. Moses is asking, when they say drawdown, what is as a result of in your account on Forex? Okay, so I think Moses is asking, what kind of drawdown do you get in Forex? Well, there too, you can tailor it. So for instance, if you take a trade that you're going to short down here and you're going to cover it up here, and let's say you're going to trade 1,000 lots and it's going to cost you, I don't know, $500 to do this trade with 1,000 lots. Well, if you choose to trade, if you take a loss on that, well, then that's a $500 drawdown, isn't it? If, however, you choose to trade only one, well, that would be 50 cents if you're only going to trade one lot. So that would be a 50-cent drawdown, if I understood your question correctly. Usually when drawdowns and returns on investments are calculated, they'll do something like they'll take the results for a year or a month, and they'll say, okay, over the last month we earned $10,000 and our most significant loss was $2,500. So we had a $2,500 drawdown. That's how some will calculate it. Others will calculate it. They will look at the period of a month, and they will say, okay, if we took all our signals and let's say we shorted from here, what is the most heat that we took on the trade before we went down and found our profit objective? And this value right here, they will record as the drawdown. So you can see it can be a little bit of a misleading statement as well, or claim. First you have to figure out how they calculate their drawdown. Well, and Moses asks, which is a result of losses, right? Well, like I say, maybe. Like, let's take a look at, let's see if I can find an extreme example. See, the darn DTS system is just so good at picking up momentum that, here, let's leave this trade alone. I'll look at another chart. We'll look at the eagle. So let's say, okay, let's say we took this trade right here. We took this buy signal right there. And right after we took that buy signal, the market fell off before it recovered and became profitable, right? Depending on how they see drawdown, they may record this value as your drawdown. So they would say our system requires so to enter here, your drawdown is down here. Our system requires a $450 drawdown. And what they'll do is they will go through their charts and then we'll look at every signal that printed where the market moved against it, and they will calculate how deep that move was. And they will record that as the drawdown. Now that's how some do it. Others will do it over the course of a period of a month or a year. And then they will say, okay, over the course of the year, we had, I don't know, 100 instances where the market fell off $450. Therefore, the system has a $45,000 drawdown. I don't know, I hope that makes sense. Or the last way is that they will just record, they'll trade the system for a year and they will record the winners and the losers. And like I said, they'll say, okay, the system earned $10,000 and we had winning trades worth $10,000. We had losing trades worth $2,500. Therefore, the net profit is $7,500, but the drawdown is $2,500. That's how most record it. But some will record how far the market actually moves against you before it gets into a profitable trade. It can be a misleading figure. All right, so here we are shorting the NASDAQ just near the top of the hour. It's only a single, testing the waters. And I think I'm going to hold my stop back just a little. Right there. I think we'll keep it right there to start, where the old buy order was. Just making a couple notes in my journal. Yeah, maybe. Mark says maybe the market will get some spark from the news at the top of the hour. Tony, are you blocked again? You'll have to let me know. I see you're in the room this morning, but normally you make a comment. You're not blocked on my end. I don't know what's going on here. Okay, great question here from Clayton. Clayton asks, how often does the number 3 print with no follow-through as it did at around 8:30? So 8:30 being 6:30 my time. Um, Not that often. In fact, let's take a look at this trade. These are obviously they're high probability signals. You should be able to trust them, but the thing is, as I mentioned before when we went over the signals, you kind of have to gauge the whole market context when you're looking at the trade. So when you're looking at this, it looks as though the market has a little bit of an upward bias, but toward the end of the session yesterday, things started to drift a little bit sideways. And then here we are opening near the top end of where the market left off yesterday. And then we come through with a number 3 signal. Now, the number 3 signal is valid, but there's a couple of things here that might make me shy away from it. And sometimes this will turn around and bite me. First off, this signal printed a minute and 47 seconds into the session. That is early. That is very early. Typically, from my journal notes, I find that I take my first trade about 4 or 5 minutes into the session, and even that one I'm a little hesitant about. Now, that doesn't mean this isn't a quality signal, or that a signal that you might take, because look, the sell signal here produced 11 seconds into the session. But I think the first thing is that it's just a little bit too early. But let's say you did take that signal. So let's say you took that buy, and ideally you want to leave your stops 2 swings back. So let's use the extreme example to start. So here's swing 1, here's swing 2. If you can't find anywhere else to place your stops, go 2 swings back. So the market brings you in and starts to move against you. Now the trade is moving a little bit in your favor. At this point, you have a decision to make. Do I want to roll my stops up? Or do I want to hold my stops where they are and see if the market tries to get up here toward the highs? If you choose to roll your stops up, the market retreats and stops you out. This is what I refer to as a good loss. You did everything correctly, but the market still moved against you. Now let's say you had your stops back here. Well, the market's moving against you, but this trade is not a losing trade yet. There is still a chance that the market will rally and retest these highs, these overnight highs. I give a little bit more strength to the daily high rather than the overnight high. I think the daily high tends to have a little bit more influence on the market. However, if we did see this number 3 signal rally early on, then maybe we would have seen some influence here from the overnight high, but only if it rallied early, because there would still be a fair amount of European traders in the market. That's, that's why I always encourage you guys to keep a trading journal as well, because you'll pick up on things like this. On my trading journal, I have, here, I'll pull it up. For those of you who haven't seen this before, I really should show a new picture, but, all right, where did I put it? Oh, there it is. Okay, this is a snapshot from a trading journal from, I guess, 4 years ago now. But even though it's from 4 years ago, I can still tell you exactly what was going on this day, on November the 8th. So I give it a timestamp, and you're going to develop your own shorthand. I don't write sell anymore. I just go S and then E, which would be for sell the eagle. I sold the bonds here. At the time, I recorded the entry price and the stop loss. Now I also record the profit target, and I use the pi symbol. I forget where I picked that up in one of my finance courses, I think. We use the pi symbol for profit, but you can use whatever you want. Like I said, you'll develop your own shorthand. And then comes the important part. You will record why you took the trade. You should always have at least 2 reasons for taking a trade. Try not to take a trade if you can only find one reason to get in. Try to have 2 reasons for getting into a trade. And then what I like to do is when here on this next trade, you can see I incurred a loss. If I've learned something from the trade, I highlight it with a star. Now, my journal has developed over the years. Now I pretty much just put 2 trades on a page. The top half is for one trade, the bottom half is for another trade. That gives me more room to make notes. But you can see, even if you start off like this, it really doesn't take you that long to scratch out a few notes, a few observations. This is how we came up with the first micro-macro crossover, 1mmXO, first micro-macro crossover. It's how we developed the second push entry. Because I would start taking second push entries, and all of a sudden I'd be recording profitable trades. And it's like, okay, let's do more second push entries. But these are things that you will only learn by doing it. So I encourage you to journal. If you use the TraderView journal link that Indicator Warehouse offers to automatically send your trades to TraderView, that's fantastic. I would recommend you keep a handwritten journal as well. It's not that you need to review it. I don't remember the last time I reviewed my trading journal. But the simple act of writing things down, somehow it ingrains it in your memory. We're just hovering here above our break-even trigger. I may actually, because the market's a little bit slow, I may move my break-even a little bit closer here to this next support zone. Now that we're below the primary support, we can probably expect the market to move 2 zones, which Could see it trading down here around 52.01 half. I'm not going to be greedy though. I'll look at placing a profit taking order, maybe 52.03 half. If I were trading more than one contract here, I would probably take profit at this first line at 52.08 and then try to run the other one down to 52.03. We might get a little bit of a pullback here. As traders are still searching for some direction in the market. Crude oil also just dead flat. My goodness, the North American sessions are just so quiet of late. So we're getting a little bit of buying, just looking for the sellers to try to regain the trend now. Oh no, Tony is shut out. I don't know what's up either, Tony. Tony sent me an email. Yes, please check with the GoToMeeting people. Yeah, and Adam wrote me as well in reply to yours. I didn't change anything on my end, so you didn't change anything on your end. Stupid computers. Well, we got to see some sellers show up here soon, or they're going to run my stop, and I missed my opportunity to get that stop down there. Well, I'm debating bringing my stop now in here above 52.18, just taking the early stop out, or will they respect the resistance on the highs? Right now, it's not looking all that promising for me. Thanks for the words of encouragement, Francisco. Francisco says it should turn back down. I would think they owe me one more move lower. You see, we've violated support here. So we've broken through. And typically we will get, when we break a major support zone, we will see two moves in the direction of the breakout. So this is move number one, the one that caused the breakout. So I'm thinking I need direction number two, move number two. Yeah, Francisco says use the magic mouse. Oh, you guys know I don't like influencing the market for my own gain. But if it doesn't turn around soon, I may have to. Roll up my sleeves, get my hands dirty. Hey, way to go, Andrew. Nice morning for Andrew. He says, I'm up $500 on gold today and $290 on crude oil. Well done. That's fantastic. Picking up almost 300 bucks on crude today. That is no easy feat, my friend. This is crude oil today. And they opened right about here. So this has been the session for crude oil. So Andrew picked their pockets for almost $300. Good job. Francisco says, gold is looking good. What do you think about the mini gold, QO? You know what, Francisco? Let's take a look at the volume. And so what you want to do is you need to go to your data, your instrument manager, and you want to see what you have for gold markets. So here's the one, the COMEX mini gold futures. You can see there's other minis to be had. I believe the YG is the one that's on the CME platform. And now what we'll do is we will build a market analyzer. Oops, here we go, market analyzer. And that's going to bring up a window that looks like that. What we're interested in now is comparing the volume. We want to see how liquid it is. So there's the big gold market. We'll put that one up. And then let's see if I can get the data for the mini. Good, I can. So you right click on here and now we can adjust our columns. I don't really care about the prices. What I'm looking for is daily volume. Yep, I guess that's it. Let's just go with that for now. All right, so here's the volume comparison between the two contracts. It's not looking all that promising, is it? Let's take a look here and we'll introduce the YG. Where's it? No, maybe it's the ZG. It's not the micro. It's not those. It must be this one here. See, what I'm doing is I'm checking the exchange at the bottom. We'll try the, you know what, let's try both. Let's try the YG and the ZG. Okay, where's my volume numbers? Is nobody trading those? Are they even active contracts? That's very odd. So, to answer your question, Francisco, 265 contracts traded is not enough volume on the day. You can see it hasn't even ticked once, I don't think, since we opened up this window. So if you're going to trade gold, I'm afraid you're pretty much committed to the big gold market. Oh, there we go. Two more shares traded, two more contracts traded. You're not, the slippage is bad enough getting into a trade. The real problem will be when you want out. You're going to experience some pretty nasty slippage. So I would stick with the big gold market. I don't think the gold minis are worth it, but that's how you can check which market is worth trading. You can build yourself a little market analyzer and you can compare markets. There's a lot of free websites as well that will allow you to compare volume between various markets. Bar chart comes to mind as one of the better ones. They're gonna spank me here in a second. Shoot. I wasn't paying attention. And now it's gonna cost me. I've waited this long, I may as well wait to see whether or not they're going to react to the resistance near the highs. Otherwise, if you want to minimize your loss, you may as well just punch out right now. If I were paying closer attention, I would have been a little bit more aggressive with my stop, especially off this bar right here. After the market broke through the bottom end of the trading range, we had a little bit of a retest, which is what we expect, and then prices heading lower, right? So if you remember, our trading range looked something like this. So prices break down, they retest, the market comes out. We should have seen some follow through here, but we didn't. All of a sudden we get a big bar. Oops. We get a big bar, and that shows a lot of activity, and all of a sudden prices start going higher. So if I were paying closer attention, I would have brought my stops in a little bit sooner for the early stop out, but I didn't. Hazards of a trading room moderator. I think I'll pull up gold here also. Andrew says, I've been using the alternative Raptor settings for gold along with my better Renko bars. We'll see if we don't get... No, they just keep pushing here. Brace yourself. This is going to get nasty here in a second. And yeah, there we go. Well, I wish I could say I had rolled my stop up when I had the chance, but I did not. A couple big notes here to make in my journal. Okay, now going back to Clayton's earlier question about the number 3 signal. So there was your entry. If your stop was 2 swings back, well, there's the recommitment by the marketplace. There's another swing that you can leave it below. Chances are looking pretty good. We're going to see a test here of the upper support zone and perhaps the overnight high. Nothing really going on here at the moment. We had a hard edge bounce here and a red bar buy in the eagle, waiting on a first micro macro cross now in the hawk. little bit more sideways trading going on. We are getting our first micro-macro cross signal. So a long way to cover it, but you really need to, because there is a chance we're going to see the market tail off here and head into a macro pullback type trade. We've got gold here on the hawk, showing a red bar buy, which should test the extreme, but we could also set up to short it on a move lower. Gold in a strong rally right out of the open. It's not to say we're not going to see a test of the extreme here, rather that maybe, just maybe, it's overdue for a little bit of a pullback. Well, I think we're better off buying the NASDAQ right now than shorting it, but like I said, we may be treated to a little bit of a pullback first. Here's gold on the Raptor, which might produce a soft edge sell signal. We've got a couple warning dots, but no real good test of the extreme just yet. Okay, and gold just filled our hawk order, so we're short on the hawk. And everybody's gone home again. The markets usually don't get this quiet until the summertime sometime. All right, and we bought the NASDAQ now on the break higher here on the hawk also. It looks like they slipped us a tick on that when they brought us in. Boy, I can't believe how quiet everybody is. Here's our gold trade, inching lower. This on the hawk. So we sold the failure of the red bar buy signal. Almost coincided with the first micro macro cross. Technically, this is not the first micro macro cross because when that printed, the macro line was still gray. So there might be a little hesitation in here to actually produce a first micro macro cross. But it looks as though gold may fall off to find our profit objective. And the NASDAQ, my goodness, it's just dried up. Okay, Tony, I just got your email. Maybe Adam clicked something. Yeah, there's nothing really here to for me to do. Just checking some of the settings while we're waiting for the markets to drift. Can somebody just type something in the chat window to make sure that I haven't turned everybody off? Just a Y or an N or anything. There we go. Thanks, Mark. Okay, well, here comes that little bit of a pullback that we were halfway anticipating on this first micro macro cross signal. Well, it's painfully slow right now, and a little bit early for a Friday, I have to say. Hey, Tony, there you are. Yeah, I got your email, Tony, and it looks like you're back. But the only other thing I can suggest is if it does it to you again, try logging in with a different email. Yeah, Tony says, thanks, I feel better now. And you made it just in time to close up shop. I think we're going to button things up here. The market just painfully slow this morning. I do expect a little bit of follow through here on this first micro macro cross, and I will start to adjust my stops the next time the buyers press. And likewise here for our gold trade, which is now producing a first micro macro cross lower. I think we can anticipate the gold trade to drift a little bit lower as well. It's just brutally slow right now. So I think we're going to close up shop here for a bit and call it a week. And I will see you again on Tuesday. Remember, no trading room on Monday. I'll be back on Tuesday. So we'll talk to you then. Bye for now.